Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me today on the afternoon of Friday, July 4th, 2025. I'd like to wish all my fellow Americans out there a happy Independence Day. Before I forget, I know it's a couple days past, but a happy Canada Day to all our Canadian viewers also. I hope you all have a great holiday weekend. Now, let's talk about the sector. The precious metal sector. 2 weeks ago, we had some weakness in the sector, and I've been talking about a correction, a consolidation continuing. But this past week, something important has happened. I am seeing more bullish signals in silver and also one bullish signal in the gold stocks, and gold continues to consolidate. So we could be at an interesting juncture here. There is a chance for silver to continue to press to higher levels. And the gold stocks perhaps can consolidate or trend higher more bullishly than we initially thought. So with that being said, let's get to the video and the charts. Okay, so starting off, here is our market overview. These are daily bar charts going back about 7 or 8 months or so. As you can see here, gold, silver, gold divided by the stock market, gold stocks here, stock market, bonds here. And what jumps out for me, and this is a big point, in silver, this appears to be a bullish flag pattern. Now, in the previous video, I was talking about you had this support here around 34.35, and you could see silver possibly come back here. Now, that is unlikely at this point because we see you have 2 successful tests of this support here, and the way this is looking, this is a bullish flag. And an important element of a bullish flag is you have a big move up, and then you have a bullish consolidation where the market consolidates around the high. It doesn't give up much in price during the correction. Now this bull flag pattern, it projects to about 41, so that's a very significant target. Now here's gold, still consolidating bullishly. It was down on Thursday, almost 1%. So this is not threatening a breakout yet, but as I've been saying, if this continues to consolidate, that's a bullish consolidation. Now, getting into the stocks, here we can see GDX and GDXJ here, GDX here, bouncing off the 50-day moving averages. SILJ, the silver stocks, even stronger than that. Similar to what we had here in silver, you can see in the silver stocks, the quick double test here, and then a move higher. So we are seeing more strength in silver and the silver stocks, which when that happens, it's a good thing for the precious metal sector. Also seeing strength in the stock market as well. Did get a sell-off in bonds, but they have been rebounding in recent months. I'm keeping an eye on this, as I talked about in the last video. Gold against the stock market remains weak, but we'll have to see because this could be coming into a significant low at some point this summer. Now, getting into gold more specifically, here's the daily candle chart for gold. Here's gold against the stock market, and this is what I have sketched out here. This is just a guess right now. It's subject to change, and it can every week. We see here gold came down to this level. Really good bounce. It was able to rally back up here before this sell-off on Thursday. And people, this just continues to be a bullish consolidation. And so I have no issue with this continuing to consolidate bullishly like that. Now, as long as it's consolidating bullishly, I think silver still has a chance where it can break out. If silver does break out, you'd probably think, even though gold's lagging silver right now, you'd probably think it can probably at least rally back to the high and maybe consolidate in this area. On the other hand, if silver cannot break out and it pulls back, then gold might be at risk for falling back to the lower end of the consolidation. Gold against the stock market here, we talked about that. You have this strong support here. The 200-day, I apologize for not showing it, but the 200-day is coming up to this area here. So this is going to be really strong support here for gold against the stock market. Now, let's get into silver because that is more interesting right now. And here we see the quarterly chart for silver, and this is the close last quarter. It took out this resistance level, which I believe this was 34 right here. So this close on June 30th, this was the second highest quarterly close ever. That's a really long time. And before that, the previous quarterly close was below this resistance here, which again, I believe these levels were 34. The all-time quarterly high is about 37.70, 37.60, so somewhere in there. If you look at the monthly, there is resistance for silver after 38 at 41. That's a clear resistance. The daily chart projects to 41 on 2 levels, so I'll get to that. But that's what we're looking at for the next upside is 41. And so again, quarterly close, very important, taking out this level. And this is going to be the next resistance here. Call it 37.75 or just call it 38. And so if silver closes above 38 at the end of September, that's a really good sign. It's going to make a run to 50. So silver is in good shape right here, and it is a threat to continue this move higher over the days and weeks ahead. Now, back to the short term on silver. Here is the daily bar chart, the 200-day moving average right here. So silver has not been that stretched. And if you look at the line chart, which I showed you at some point recently, you do have an ascending triangle breakout. It's a rough pattern. It's not perfect, but that pattern projects to 41. At the same time, you could put a line here, and you have this sideways pattern, and that projects to about $40.50 an ounce. So you had multiple things pointing to 40.5, 41, and then what do you know? This bull flag pattern right here, what does it project to? The measured upside target, 41. And as I just said a moment ago, you look at the monthly chart of silver, where's the next resistance? 41. So when you're doing technical analysis and you start to see all these things pile up where they're pointing to one level, what does that tell us? 41 is going to be a very strong target for silver. So if it can take this out here, call it 37, you get another daily close. I'd expect in the next couple of weeks, you get a daily close like that as a breakout, and that's going to get us on our way to 41. Now, stepping back again, I apologize. I'm looking at long-term and short-term and going all over the place here. But stepping back, here is the analog chart, which shows silver's performance after gold makes a move to a new all-time high and breaks out and sustains it. These two lines here are the averages. The higher one is the average of all three, and the lower one is the average of two of the three, and this removes the stronger move. So the lower average removes that 79 to 80 move where we just went through the roof. And we can see both these averages, look where they are. Look where this one is. That's at the end of September, the end of the next quarter, that's above $50. But I want to show you something that's more interesting in the next chart. Same chart here, but I just deleted everything except for 1972. Remember, gold in 1972, the biggest breakout of all time, breaking out of a 110-year-long base. Although it was artificial, still extremely significant. So this plots the performance of silver during and after that breakout move in gold. And what do you know? This is a pretty good fit for where we are here and now. Not that dissimilar. And I like this 1972 line here because it doesn't shoot up above 50 right away. In fact, it doesn't break 50 until over here. Somewhere in January or February, actually. And so that is what? That's 7.5 months from where we are here and now. It shows that the next move, you get to 50 and then you pull back and consolidate for 1, 2, 3, 4, over 4 months. I would love to see that. You could get a move to 50 and then you pull back to 41, 42, which we know is a very strong target. By the way, love this cup and handle. This is a beautiful cup and handle in silver in 1972. Then you had the big move higher. So I'm not saying we're going to exactly or continue to repeat what happened in 1972, but I wouldn't be surprised if there's an outcome similar to this, where silver trends higher, gets to 50, but then it has to pause for a little while. So another thing to keep in mind. Also, not just keep it in mind, but put it at the front of your mind. If you're not a subscriber to the Daily Gold Premium, would love to have you come aboard. Go to thedailygold.com/premium. We cover the stocks that we personally invest in. I'm looking for companies that have 5x upside potential in the next 2-3 years in gold and silver in the junior sector. And we're looking for high quality companies with real assets, companies where there's really good value, companies that are going to add significant value over the year or two ahead. And that way you combine that added value with metals prices rising. That's how you get 3, 4, 5x gains in this sector. So that's what we do at the Daily Gold Premium. Those of you who are subscribers and have joined us, thank you so much. I appreciate you. Your business allows me to do what I love to do. Those of you who haven't subscribed, would love to have you give us a shot. You can email me. I'll answer any questions you have. So thank you so much for listening to this. And let's talk about the stocks, because I've been talking about the stocks and this consolidation in GDX, GDXJ, whatever index you want to use. And I've talked about the advanced decline line in past videos, how it's a trusty leading indicator. It's not always perfect, but it's damn good. I would say it has like an 80, 85% success rate. This is a GDX advanced decline line. This is GDX right here. So when you see a higher low in GDX, for example, this is a higher low, this is a higher low, these are lower lows right here, lower lows in GDX and higher lows in the advanced decline line, that's a positive divergence. That's a leading indicator. This right here, higher low in GDX, lower low in the advanced decline line, negative divergence. What are we seeing here and now that's so powerful? This is a higher high in the GDX advanced decline line, well ahead of GDX very recently. So this tells us the advanced decline line, it's a measure of the total participation of the sector. So the sector is the strongest when most of the stocks or nearly all of the stocks are rising. You don't want the index going up because 5 of the stocks are just moonshotting and then the rest of them are weak. That's not a healthy market. A healthy market is when you see this. When you see higher highs and new all-time highs in the advanced decline line before the index itself. So this is another bullish signal for the gold stocks. I really hope that maybe they will. I'd like to see them consolidate further, but this is telling us they're a threat to push higher along with silver, even as gold might consolidate and not break 3,500 yet. Now, moving on to the big picture. 2 weeks ago, I was talking about we have this correction. We might come down here. There's 10% downside. And yeah, that's still possible, but this is what happened. Bullish engulfing candle in GDX, GDXJ. Not quite as strong in GOEX. But again, bullish engulfing here. So that shows strength. If gold stocks were going to threaten to come back down to these levels, you probably wouldn't get a candle this strong. So that's throwing cold water on my correction analysis from a week ago. Now, finishing up here, let's talk about the short term. This could be a really bullish, a really strong bullish cup and handle, by the way, in GDX. You have a cup here, handle right here. And by the way, good rebound here at initial support. So you had this bullish hammer. We talked about it last Friday. But even after that, look, really strong follow through here. You had selling here, but this is Wednesday. You have a good candle. Thursday, really good candle. So these are accumulation candles. You go back to last Friday, bullish hammer, accumulation candle, another accumulation candle, strong accumulation candle. Here's SILJ. And as I said, the silver stocks, they are the strongest right now. Maybe they are hinting that silver is going to break 37 and trend to 41. So that's all for this video. I could go on, but I got to stop it there. What we see is silver is threatening to break above 37 and make that move to 41 and eventually 50, perhaps in the coming months. That is a threat. The evidence for that happening is rising. Meanwhile, the GDX advanced decline line, that is signaling a positive divergence. And when you couple that with this price action where it's overbought but it's going sideways, that's a bullish sign. Corrections are a function of price and time. What do we see here? This is a correction as far as time. This is where it started. In the middle of April, right here. Where are we? A tiny bit below that. We're in July. So 3 months so far, it's a correction in terms of time. Same thing here with GDXJ. So this could continue to go like that, or it could trend higher like that and break out. But the advanced decline line is telling us this is a threat to move higher over the short to medium term. Thank you so much for tuning in. Hope you all had a great week and an even better holiday weekend ahead. Again, happy July 4th. Happy Independence Day to all my fellow Americans out there. Leave a comment. Let me know what you think. Would love to hear from you. Thank you so much for tuning in. I really appreciate you watching these videos and supporting the channel. And I'll talk to you guys again Monday morning, bright and early. We have an interview with Vince Lanci coming up. Thank you.